Okay, ladies and gentlemen, this is FOMC Wednesday with your boy Sir Hans Felix. You know the vibes, you know the voice. And right there and then we're going to get straight into it. All right, so the first pair that we're taking a look at is gold, obviously. We've been selling for a while, but it looks like by around, I would say 12 p.m., we respected this demand zone. Honestly, this is what I had anticipated um, earlier into the session, and then I called the trade, and then of course, the market decided to go down into 40.09, and then the stop loss was hit for 54 pips, no biggie. However, by 12:30, we can see I hate that. I forgot all about 12:30 today. Took a nap just to be ready here for FOMC. But we usually can tell like 12:30 during the Wednesdays and the Thursdays if price was selling in the beginning hours of the New York session. Typically, we see a 5 minute break in retest, and by 12:30, it's always been the safest with the probabilities to take a counter trade buy and just put the stop loss below the 1 hour low, for example. All right. So with that being said, we are pretty much buying into yesterday's highs here. So it's two things that could happen. Since we've already pushed back into the earlier hours of London for gold, we might see a push to the upside. And going down into the 5 minute time frame here, this is a small or minor structure. We could see price literally just come back and retest this low and take off. So for the risky guys like brother Aliciago over there, if I were to take a counter trade by 2 p.m., I would just make sure that my stop loss is below 40.33. Conservatively, to
Mhm.
each their own, but conservatively, like that would be the best play at this moment right now. Because I really would not want us to be blowing accounts. There's really no need. One thing I happen to know is day, the next day, the market usually corrects itself anyway, and it gives a much better clarity. I was about to say clarity act. It gives a play and much more clarity to trade post FOMC than anything. You know, it's really not that big of a deal to have to trade that day. I even called a friend of mine and I was like, yo, I know you plan on taking a trade, but you really don't have to. And are you already up for the week? Yes. Then there's really no need to be trying to take any kind of trade. All right. And that's just what it is.
3.5 minutes,
Mm-hmm.
and she's giving a nice little pullback right now. By the way, guys, Hans jokes to me about my aggressive trading habits. Um, but on high impact news, I think it is only aggressive if you are not straddling the news, right? Like, so for me, for those of you that know me in the pip juice strategy, we have a zone. We have buy stops and sell stops based on breaker structures. And what we know is that we need a lot of volume in order to break structure. And so on these high impact news days, what we know for sure is that there is a lot of structure that could get broken. And so, that's how come I love trading these days. I'm not gonna lie. I love trading these days because it sets up for what I think is the highest my highest wins come from FOMC, NFP, and PPI. And that's just me. I don't know if anyone else has that testimony, but that's just me.
All right. Cool, 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 cool. It's about 2 minutes till FOMC here. Let's see what US 30 is looking like. Okay. We have a break. This pullback seems a little fishy, but um, for those who are planning on taking a trade, your stop loss should probably be under the 1230 change of character here on a conservative note. Another thing is this: if you're gonna take a trade right at two, you don't want to be in a trade past 225. That's usually when price is retracing. Um, the algorithm does this: 2 to 235, 245 until 3 p.m. And then whatever position you're in, if it's doing well, you hold it until the end of the session, or you just close out entirely. So you have these three options, and one of them can really make or break you.
A robust discussion. I think we'll have it.
With that being
We're
said,
going to come to
uh, let's see what happens in the next 45 seconds. I welcome all the people that just got in here. We got Gloria, Isaiah, JH, Marco, Nico, Natish, Stezzy, Ollie, Dent. What's up? Sandra, SB. Oh, we got Wilner in the house and we got Sandra again. All right. Cool, 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 cool beans. There's about 20 seconds left, 25 seconds left. Let's see how this FOMC plays out. Now, we already called it. The numbers more than likely will come out even Steven. Okay. Let's keep price on. Boom.
Oh, there we go.
There it is.
It is. That quick.
There it is.
Wow.
There it is. Stop loss below 40.35 was safe. US 30 pulled back into this area. There it is, ladies and gentlemen. We spot on again, huh?
Spot on again.
All right, let's go ahead and check Forex Factory. Numbers came out exactly as anticipated. Boom. All right, cool.
And all my trades are in stop profit. So we just ride it.
Yes, sir. All right. First thing I would do is I would close some partials because this actual candle is not to be trusted fully, but yep. So price action most likely will be heading into the morning hours. So if you are in some trades right now, you're already up about 160 points on US 30. We're probably gonna head into what is it, 52, 133. More than likely, we will be attacking 52, 307. Getting close to there, you should close profits. Gold is for sure heading back into. At this point, gold is respecting this 4-hour low, so that's definitely about to be over 500 points or pips. Yep. 4-hour structure demand usually buys 1,000 pips. So, yeah, looking good, guys. Looking good. Looking good. Looking good.
Anybody in the chat have any stop orders set?
You know I did, Nico.
No,
Oh,
I know
yeah.
you did. You always got your stop orders set, bro.
Like I said, you know I did because
Me.
I already told you this is one of my best trading days,
Oh yeah.
right? And
Got to
so
have got to have volume, bro. Break these structures.
All right. So, how do we break this down? I mean, it's not over yet, right? The last time I got on Zoom with Dave, and it was what was this NFP? We called out the same exact play. A lot of the pullbacks these days are not as deep and scary as it once was in like 2024, 2022, 2021. So I figured like on a smaller time frame, price would give a very shy minor pullback, and then man, you'd get away with murder by just putting your stop loss under the minor structure low, and then you take the risk according to your plan for the day. And you don't have to be in there for long. I mean, 300, 400, 500 pips, that's a good day. Risking very little, next to nothing. You pump the volume, you take your profit, and you're done for the day. So this is how we treat trading news. This is strictly business. You're not here for laughs and giggles and trying to show off. You take an advantage. It's risky, but you come in with the right set of posture and risk management plan. And if you feel like your heart is skipping three beats at a time and you didn't take your hypertension pills for the day, that's not the condition that you want to trade. All right. So even though I called out what I wanted to see, I didn't even get to enter the position that I wanted to. So what do? I sit down because all this is data that I'm observing, I'm taking in for the next situation, the next circumstance, and it helps to understand your reasoning behind taking the trade over your heart skipping a beat. Does that make sense, everyone?
Yep.
Perfect. I'm one of those traders who so happen to have had 100K day on FOMC on May 1st, 2024. So I'm not lucky when it comes to trading FOMC or certain news news days and such. I've put in years of data and understanding and execution mentality for moments like these. And some days doesn't mean you have to find that self gratification by entering the trade. Like if you were not ready, it's completely fine. Completely fine. All right. Yeah. So let's go ahead and follow up and see where everything is still at. I know some of my students in here also were in early. Shout out to Alice.